Focus on this one chart and you will be able to beat the market in a profound way going into next week, going into next few weeks, guys. But particularly if you're trading options, okay, your goal is to spot certain correlations, and especially when they are running real tight, because it gives you a clue exactly how the other parts of the market are going to move. So the chart I want to share with you today, guys, is the chart of US dollar. Yes, it's that simple. So for most of you, depending on your broker, you can go and look it up. It's going to be $DXY. If you're on stock charts, you can put $USD. Whatever software you got, it's going to be a variation of DXY or USD. I mean, that's how you can look up the chart of a US dollar. Now, the most important thing is this. If you pull up the dollar chart on a longer time frame, you will see that, I mean, clearly, the biggest drop in the market in the last 45 days has occurred on the days where also US dollar has dropped the most, particularly when you see this big red candles, like when it was dropping from 108, 107 level down to, 103. Those were the biggest point drops in the market if you measure those candles on USD versus, like indexes like NASDAQ or S&P 500. So that is not normal, however. I'm here to tell you that that is not a normal correlation. Normally, when the markets sell off, DXY would go higher. US dollar would go higher. Bonds would go higher. Well, that's not what's been happening. So I've clearly recorded multiple podcasts on this over the course of last, 30, 60 days. And you guys had sufficient time to prepare yourself. But I'm yet finding out that people are not focusing enough on this basic and simple correlation. So, and then that's why I decided to record the whole podcast devoted to it. So, guys, understand this. Whatever DXY is doing, okay, that's what the market literally repeats within few minutes. So if you focus on what DXY chart is doing at like 1 minute, 1 day, 1 minute time frame, then literally within a minute from what DXY is doing, you're going to see S&P 500 do the same thing. You're going to have bonds doing the same thing. You're going to have, a lot of things are doing the same thing that DXY is doing. So for example, if you're in front of your computer, you can go and measure the low on DXY, which was yesterday. It was trading at the low of 99.17, and that time frame has happened to have an incredible importance. If you lay over, or if you just pull up a chart right next to it of /ES, which would be your S&P 500 futures, or you pull up NASDAQ futures /NQ, you would realize that both indexes set the low literally within a minute from when DXY was setting the low. Now, the opposite is true. Some of the bounces are happening immediately after DXY begins the bounce, then the market resumes the bounce. That also is true today. If you look at the lows of the day, within an hour after the market opened, DXY begins to drop sharply, sets a low, and that's exactly when the market sets the low for the day. Then DXY begins bouncing. What do you see? Your S&P is bouncing, your NASDAQ is bouncing, and then if you were trading with me today, I told you, hey, we're going to go for a move 6 stop situation today. And so the market sells off again when dollar, okay, sets a daily top, begins reversing. That's when the market sets the top, begins reversing. And you're going to see that in the last 15 minutes, what was happening? Well, the dollar was dropping. So that's when the market was dropping as well. So guys, this correlation, sometimes, when you deal as a trader with various correlations, I mean, they're so on point, they're so precise, you should not be ignoring them. So what I'm saying, the way the correlation is running right now, it tells me that there's a great amount of fear in the market that US dollar is going to collapse the fuck out, which we've talked about that for the last couple of years. But now we actually have the correlation so tight, okay, that that's when you can go and put together a trade on a very short-term time frame, like options that expire in 3 days, 7 days, that sort of thing. And you could put together a colossal trade based off this information I have just given you guys. So if you look at a longer term chart of DXY or USD, you're going to notice that your averages, your 200-day, 50-day just crossed literally like 2 days ago. And since that happened, okay, dollar has not made the big move lower yet. Like, dollar has not made a move under 99 yet. But if you break down the chart and you look at a bunch of indicators, you guys will see that a lot of them are pointing to the fact that dollar is about to make a leg lower, a next leg lower. So, I mean, the chart looks like, you know, you take the elevator down, then you go sideways for a little bit, and that's the point when you take another elevator down. And so most of the market participants, they believe exactly the opposite is true, like dollar's gonna bounce. But we know a few things about charts that don't bounce, guys. And, you know, one of them, the easiest illustration is Bitcoin chart in 2017, 2018 transition. Basically, when it drops, it attempts to bounce, but it doesn't bounce when it comes to prior levels of support, but it doesn't bounce. Oftentimes, it's an indication it's going to break down that support. So dollar is trading at a support level, and majority of the market participants, they believe that dollar is going to pump up from here, and this level of support is not going to be breached. I'm here to tell you that after taking the elevator down and unable to bounce in a meaningful way from this support level, I would say the probability of a dollar making another big move lower down to, let's say, 97, 96, 95 level next week, I would assign an enormous probability to that. I would say the probability of that is above 87.2% based off everything that we look at here at 13 market moves. So you gotta love this sort of setup when, you know, the rest of the market looks at it in a totally different way, but you can clearly have, you know, so much evidence that the dollar is about to make a move fucking lower, and there's no way around it, with exception that when the market realizes that indeed this level of support is breached and dollar is moving lower, they're gonna dump a lot of things, including U.S. bonds. And so we're close to that level. And tomorrow the market is closed in the United States. But guess what? The markets all over the world, they don't stop tomorrow. They're trading to, you know, I mean, pretty much everywhere the markets are open. So the move could very well, in the bonds could gap down Sunday night is what I'm saying. The bonds could have a phenomenal collapse by the time the markets open on Monday. And this is, you know, when you put together the charts of other indexes like NASDAQ and S&P and RTY, I mean, they look, I mean, absolutely just disgusting. Like if you're bullish, right? Because there's so many. I mean, I may just have to record a video over the weekend, guys, showing you the charts. But I want to knock these podcasts out quick, guys, because the market is moving. There's so much opportunity there right now, and I just don't want to not record something because it takes a lot longer to record like a charts video. But go and look up these charts on all these indexes on different time frames. Go look up the key stocks, okay? I mean, nobody believed me. Fucking NVIDIA was going to go as low as the 80s. And I said, don't touch NVIDIA until it drops to the 80s. And I said that when NVIDIA was trading at 150. And people were fucking like, oh my God, are you out of your mind? That's the best AI stock. Well, fuck. None of that shit matters, okay? The point is, just when you think that shit cannot go lower because you're so brainwashed by Wall Street analysts, by Bloomberg, by, you know, and you got such a sentiment overall in the market that, oh, it's going to bounce. Well, chances are, I mean, something could bounce for a moment, but you know what what is the next moment after that? It's the moment of happiness when you're a short seller, because the next moment shit is dropping. So, I mean, some traders, again, were trying to jump out of S&P puts when they bounced today to 53.50. I said, no, what the fuck are you doing? Short it. Add right now at fucking, what was that? The exact level was like 43.57. I said, buy the fuck out of today's expiration. Sure enough, we dropped 50 points. Guys, do you know how fucking much that pays you in the last hour of the trading session on same day expiration? Well, that's a fucking, that trade ended up doing 13x trade in 45 minutes, okay? But you can't ignore these bounces, and you got to just go in there like a ninja assassin, and you got to, you got to be ready there. It bounces, you're short. It bounces, you're short. It bounces, you're short. And there was such a high probability evidence. Like, if you use the information I just explained you, and you go look for today's trading session with a different set of eyes, meaning look at the market action today through the lens of USD DXY chart, through the lens of the bonds ticker /ZB, or you can just go look at the TLT chart, right? You're going to see that both dollar and bonds were dropping, and there was no way, okay, with bonds and dollar dropping at critical fucking levels, there was no fucking way in the world that the market was going to have a meaningful bounce. And the only reason probably the market even was able to squeeze back to the level of 53.57 at one point was because of the fucking hype. Yeah, oh yeah, Trump, he's going to make a deal with Japan. He's going to make a deal with China. Oh, he's making deals. Oh yeah, White House says they're about to announce some deals. Oh, that is just a fucking, it's trash, okay? If you pay attention to that, you will end up blowing some of the greatest fucking short selling opportunities in your life. Because with Trump, they're easy. And I told you why they're easy, because nobody's going to believe a word he's saying after what he's done to the market last week, yeah? And what did he do? What he fucking said, there's no way he is reversing the tariffs, and there's no fucking way, nothing in the world can make him do that. And the next fucking day, what does he do? Oh, we're going to put a pause for 90 days. Like, it's like nobody's going to fucking listen, okay, to what he's got to fucking say anymore. He lost his fucking credibility last week. So the way anything that comes out of his mouth now is, and that creates a bounce, I'm telling you, those bounces will be short-lived. So you got to catch them. You got to short the market while it's bouncing, damn it. So all of these bounces, guys, they will resolve in a move lower. And what I'm here to tell you, as a result of what I just described to you, this correlation that is not typical correlation, okay, for dollar dropping when the market is selling off, for bonds dropping when the market is selling off. These we're not looking at a normal type of market right now. And so until we have solid evidence that correlation is no longer present, okay, I would stick with the current correlation, because number one, it's precise, it's super tight, and I mean, you can't wish for a better read on the market of being so precise, at any point. I mean, you get a correlation that is so tight, you stay with it. You stay with it until it begins breaking, okay? And just understand, even tight correlations, okay, that means overall, I mean, things are going to move in the same direction shortly after the dollar makes the move and the bonds make the move. The rest of the indexes will follow. The rest of the stocks will follow. Okay, but the point is, even for a fraction of the day, I mean, don't expect it to be, counting it second by second. I mean, sure, there could be a little bit of a variation there, even with tight correlations. So, but if you focus on that, guys, I mean, the sky is the limit. I mean, you could, my God, I mean, and with option premiums, they have come down this week because the size of the move has been diminished. So, but we're like what I said in the last podcast, the ATR average true range, it's about to expand again. It's going to fucking expand. And the reason you would know in which direction it expands. Well, I've recorded the entire course on that. It's like a 6-hour course telling you about the tornado pattern, telling you about the best entries and exits. We call that course the Crypto Star. So that Crypto Star course, because a lot of examples, I'm actually using the Bitcoin charts to explain everything. But you can literally apply these indications that I'm explaining in that course to any chart, okay? But that's why it's called the Crypto Star, because a lot of examples are with crypto, with Bitcoin chart, Ethereum chart, so on. So, but guys, if you haven't taken that course is about entries and exits and what to look for specifically on the chart. Like, what is the setup on the chart that you can go with a high probability and just nail that entry, that exit, okay? So, you haven't taken the course, you got to, okay? Because I don't know how you trade without looking at some of these things. So, you study that, combine it with the correlations that just explain you. I mean, nobody can stop you as a trader, okay? As an options trader, nobody can fucking stop you next week, guys. So, anyways, good luck to everyone next week, guys. It's going to be a phenomenal fucking week. Okay, so pay close attention to the DXY USD chart. Pay attention close attention to the bonds. There is, of course, the White House keeps saying, "Oh, the deal. We're going to make a deal with China. We're going to make a deal with Japan." I'm here to tell you, based off what was happening to the USD and the bond market today, if indeed there is going to be a deal announced with Japan, what kind of shitty deal it's going to be, I mean, I'm only left to guess. And, you know, it can be good, okay? Because the fact that, like, if they're really making a deal with Japan and that's going to be announced, then why the fuck is Japan dumping bonds today all day? And I know why it was Japan, okay? Because they were also, in the beginning, earlier the day, they were dumping MSTR, which, by the way, guys, get ready. Fucking big-time MSTR crash, fucking collapse, okay? MSTR stock right now is at a point where 2 + 2 equals fucking 30, okay? That's the kind of level you're in right now. So, needless to say, we did buy a shitload of puts today, expiration. Those didn't work. But guess what? That's not going to fucking stop me from buying a shitload of MSTR puts, okay, for next week expiration. And we got some already, but guess what? Be buying more fucking Monday, Tuesday, Wednesday, okay? So, guys, just because the trade doesn't work on one day, man, you got to fucking keep going. Like, not so long ago, right? It was the same thing with oil trade. We shorted. Doesn't fucking work. Short it. Doesn't work. Short it. Doesn't work. Fucking on like 10th, 11th attempt. I'm fucking, man, these, like, everything lines up for a big oil drop. Finally, it fucking drops. 289x trade. 289x trade, guys. So, and, you know, I think MSTR next week could even be bigger than that, guys. Now, of course, it has to do with your strikes. The time when you buy them, your entries and exits, it all deals to the entries and exits, guys. So if you want to improve on that, go take the Crypto Star course. You can go to thirdgenmtv.com, click the button there, take the fucking course, guys. You know, if you haven't taken it, man, you're trading blindly, straight up. So anyways, guys, happy weekend and big fucking profits to everyone next week. Let's go.